The Asian Banker 500 is the world's first and most authoritative annual ranking of the strongest bank based on balance sheet strength. Although the concept has been emulated by other organizations, we remain the most comprehensive and robust evaluation of its kind. The ranking is based on a very detailed and transparent scorecard that ranks commercial banks on 6 areas of financial performance. And we look across 12 specific performance indicators in areas such as the ability to scale, balance sheet growth, risk profile, profitability, asset quality, and liquidity. The evaluation is conducted between March and August each year when banks' annual financial results are available. The Asian Banker 500 ranking is widely followed by investors, analysts, research houses, and the media as the leading source to assess the financial strength of commercial banks in the region. The Asian Banker 500 annual ranking was started in 2002, known back then as the Asian Banker 300. In 2007, we expanded the ranking to include the strength of the balance sheets into our analysis. We have also expanded the ranking to include the top 500 banks, as more banks in the Asia region grew to make it to the list, calling it the Asian Banker 500, as we know now. We have also introduced a ranking for banks in the Middle East. Now into its 12th edition, the Asian Banker 500 ranking continues to be the financial services industry's most comprehensive annual evaluation of the strength, quality, and sustainability of the balance sheets of banks in Asia. The AB 500 comprises the largest bank ranking, strongest bank balance sheets, as well as performance ranking across 12 specific performance areas. This year, we have also introduced a forward-looking element called the Bank Watch List into the evaluation. This is with the aim of providing a holistic view of the ranking. I will talk about the Bank Watch List later. Let us first look at the size ranking. We will present an industry-level overview before looking at the performance of individual banks. Overall, financial performance of Asian banks showed an obvious downtrend in 2012, which is another challenging year for the industry. China overtook Japan in the numbers among the top banks in the AB 500 ranking, as Japan saw the largest drop of 14 banks from 126 in the previous year ranking to 112 banks in this year's ranking. The share of total assets for China was up 2.4% to 38.6% as compared with a drop of 3.5% to 33.9% for Japan. China and Japan are still the main contributors to the top 500 banks in the region. Combined, they have the largest market share of total assets, net loans, and deposits. Although Japanese banks have been recovering, they still lag in terms of market share of net profit. Chinese banks account for 53.2% compared to 12.6% for Japan. The expansion of the banking sector in Asia Pacific last year was not sustained. The growth of key indicators of the banking sector such as asset, loans, deposit, and net profit slowed significantly in 2012, raising questions over bank performance in the coming years. Asset, loans, and deposit grew by only 4%, 6%, and 3% respectively, compared to 29%, 18%, and 30% in the AB 500 2012 ranking. Total net profit of the 500 banks grew by 12% or 38.7 billion, much lower than 43% or 94.2 billion recorded in 2011. More than half of the countries in the region saw a decline in weighted average return on equity. At the bank level, the top 10 rankings are dominated by Chinese and Japanese banks. Industrial and Commercial Bank of China overtook Mitsubishi UFJ Financial Group as the largest bank in the region, with an asset size of almost 2.8 trillion. Now, this is partially owing to the yen's weakness against the US dollar. China Construction Bank and Agriculture Bank of China also move up in the ranking. We project that 4 out of the top 5 largest banks in Asia Pacific will be Chinese banks within 2 years, and China may even make a clean sweep of the top 3 banks in the near future, based on China's faster growth than Japan and the trend of the renminbi strengthening against the US dollar. Now, one of the interesting findings from our ranking is that the Southeast Asian banks have been performing better than their peers from other regions. While total bank assets in Southeast Asia only accounted for 6.1%, their growth rate of 14% in 2012 exceeded that of North Asia, which grew by 3%, South Asia, which grew 10%, and Australasia, which grew 5%. Despite the fact that the number of Southeast Asian banks in the Asian Banker 500 only increased by 2 to 27 in total. Both loans and deposits grew faster, as did net profit for these Southeast Asian banks. Apart from banks in Singapore, those in emerging countries such as Indonesia, the Philippines, and Thailand also showed good financial performance in a fast-growing economic environment. Indonesia has the highest net interest margin in the region and the highest weighted average bank lending growth at 24.2%, as well as the highest weighted average return on equity and return on assets of 21.4% and 2.5% respectively. Net interest margin may drop slightly due to tighter competition for loans, and loans to deposit ratio may continue to increase in the face of greater competition for deposits. And we do see the pace of growth slowing. The performance of Southeast Asian banks is not expected to be sustained, as concern over imminent easing of quantitative stimulus in the US may have a worse than expected effect in the region. In terms of strength ranking, the AB 500 tracks the relative financial strength of banks in response to their respective market conditions based on a common scorecard. It is modeled on a transparent, balanced scorecard approach weighted against 6 crucial elements, as we mentioned earlier. And this covers 12 specific performance indicators. In terms of scales of operation, the weight carries 17.5% as compared to the overall evaluation. Balance sheet growth account for 5%, risk management for 25%, profitability for 22.5%, asset quality for 15%, and liquidity 5%. The balanced scorecard is not only a recognition of the balance sheet strength of banks in the region, but it also offers an opportunity for banks to reflect on the factors that underpin their strength, and is often used as a benchmark in terms of how their financial performance is evaluated. The latest ranking found that the average total capital adequacy ratio of the largest 500 banks stood at 14.6% in 2012. This is up 14% from 2011, as banks in the region prepare to meet new Basel III regulatory capital requirements. Increased capital inflows into the region over 2012 and previous years have also helped shore up banks' capitalization. Asian markets have been awash with liquidity for the last few years. This has helped keep interest rates low, driven unprecedented credit demand, and build up banks' overall capital positions. Banks in the region have benefited from the sustained and resilient economic condition in the region, and excess liquidity has fueled healthy credit demand in the past few years for these banks to grow their balance sheets. However, we have observed a slowdown in growth in 2012. What is interesting is the average non-performing loan ratios of the region's largest bank increased from 2.51% in 2011 to 2.58% in 2012, while the average loan loss reserve to gross NPL ratio dropped from 246% to 163%. Overall, Asian banks face the potential of asset quality deterioration in the next few years, reaching a turning point in the current credit cycle. Asset quality of banks in India is expected to be among the worst in the region. We found that the average weighted NPL ratio of Indian banks was up from 2.4% to 3.2% in 2012. The weighted average NPL ratio for Chinese banks stood at around 1% based on published data, which in our view does not reflect the actual asset quality in China. China faces the twin challenges of sustaining its economic growth while restraining excessive increase in credit. Hong Kong's Hang Seng Bank topped the ranking this year on the bank's financial strength on the back of stronger asset and profitability growth. Overall, the aggregate strength score for the top 500 banks has decreased as performance in key parameters such as profitability growth, liquidity, and asset quality moderated from a year ago. Out of the 19 countries and territories covered in the rankings, 11 of these saw their bank's average strength score decrease. Singapore has the highest country average strength score at 3.58, followed by Hong Kong at 3.20. Average score for all 500 banks declined from 2.53 to 2.49. The strength score of Hang Seng Bank at 4.19 is lower than the 4.31 score recorded last year. If we look at the top 20 strongest bank balance sheets, you can see that they are represented by banks from Greater China and Southeast Asia. This year, Hang Seng Bank is the strongest among the largest 500 banks in Asia, improving on its fourth position last year. This comes on the back of stronger asset and profitability growth, as I mentioned. Standard Chartered Bank, the strongest bank last year, lost ground and is placed 11th overall, as its asset growth, profitability, and liquidity moderated from the year before. Singapore's OCBC and UOB are back in the top 10 and are placed 8th and 10th respectively, while DBS, the strongest bank in the island state last year, has moved from 10th to 24th. Maybank is ranked 9th, the first time that a Malaysian bank has made the top 10 since 2008. Agricultural Bank of China made a big move to second position from 12th last year, surpassing Industrial and Commercial Bank of China as the bank with the strongest balance sheet in China. Bank of China dropped out of the top 10 ranking this year. Now, this chart shows the strongest bank balance sheet by country. The Asian Banker 500 ranking look at country level ranking by both size and balance sheet strength. As well as the ranking, the Asian Banker 500 also provide a country capsule which contains commentary on key macroeconomic and banking industry developments during the evaluation period. So apart from the top few banks, we can see that in Thailand, Bangkok Bank is the largest lender in Thailand, was able to maintain good asset quality with strong loan loss reserve and sustained growth in balance sheet and profitability, as well as improvement in risk profile overall, making it the strongest bank based on its balance sheet strength in Thailand. As I mentioned earlier, this year we have introduced a forward-looking element called the bank watch list into the evaluation with the aim of providing a more holistic 360-degree view of the ranking. Balance sheet and financial result-based evaluation are by definition backward-looking, as they look at past performance. Now, with the introduction of this watch list, we hope to overcome this shortcoming by identifying and considering the impact of specific evaluation parameters should macroeconomic and business condition change. For the second year running, we see smaller, fast-growing, and relatively new banks making it to the top of the ranking. For example, 30 of the top 50 strongest bank balance sheets belong to these small banks, which, when you look at their size, they actually rank outside of the top 100. This bank generated much higher growth in loans and deposits, and at least on their balance sheets, reflected better profitability, risk profile, asset quality, and liquidity than the other banks. In this year's ranking, we have identified net loan growth and NPL as parameters that have relatively larger impact on financial strength of banks. Banks that have grown net loan relatively quickly and yet been able to maintain NPL at very low levels on the balance sheet are generally in great shape. However, such performances also show up potential susceptibility and vulnerabilities to a credit cycle downturn. With the bank watch list, we hope to track this small but fast-growing banks based on these two criteria, that they've been growing their assets very quickly over the last 2 years, while being able to maintain NPL, as we foresee that NPL ratio will probably go up in the next 12 to 18 months. The bank watch list does not reflect the financial performance or the management of this institution. It is to be used more as a tool to monitor and review parameters in order to give a holistic view of financial strength and the institution that we are evaluating. Besides the size and strength ranking, we also rank the banks according to key performance indicators, such as profitability, return on equity, return on assets, loan growth, deposit growth, NPL ratios, cost to income ratios. The complete set of data and ranking covering 16 performance indicators they are available for subscription on our website. Do visit the Asian Banker 500 website at www.theasianbanker.com on how you can subscribe to the online version of this comprehensive database of Asia Pacific top 700 financial institutions. Now, I've come to the end of today's briefing. But before I go, I would also like to acknowledge the work done by the Asian Banker research team on this project led by Wendy Wang, who put the ranking and country capsule together. Now, a recording of this briefing will be made available on the Asian Banker website. So do visit the website, and if you would like to listen to a playback of the session. We would like to thank everyone for calling in this afternoon. And until our next event, we wish you all a good day.